Hello everyone, and welcome to this educational presentation of how to trade the current bull market. Now, as we've all seen, regardless of what news comes out, of what the current economic conditions are, the market continues to go higher and higher. And this has left a lot of people on the sidelines wondering, should they get in or how to find out if it's going to go higher? Exactly where do they get in and where exactly are their entries based off of? Well, this is really simple with the things that we teach and that we currently promote at Specialist Trading. In fact, let's look at something that came out just about last month. This was a news event. CNBC reported that Amazon shares break out above 1,000 for the very first time ever. So in the first hour of trading, it was stated that Amazon crossed $1,000 per share before sliding back under. Still, it was the first time Amazon had reached the milestone. Analysts on Wall Street are overwhelmingly bullish right now, and no brokerage houses were issuing sell recommendations. So this is the way people usually find out about what they should invest in or if they feel confident to get into the market. So as we look at the current chart of Amazon, we realize that it's an expensive stock, $1,000, and that's where the news came out at the far right. But I'm going to show you two methods today where you could have used to help generate buy signals here, here, and if you miss those lower levels down 200 points, even here, just to show you how simple it is when you use our techniques and you learn how to listen to the market with the things that we teach and promote here at Specialist Trading. So this promises to be a great educational presentation. Thanks for joining us today. My name is Steven Primo. I'm the president and founder of Specialist Trading. If you're new to our webinars, our sole intention is simply to educate you. We're a little bit different from other presenters or webinars you may have attended in the past, in that we're not here simply to tell you what the perfect stock is to buy, what the perfect market is to trade, what the perfect time frame. We really don't believe in that. In fact, it's been my opinion that that's actually a recipe for disaster. We're not a signal service company. We're here to educate you. We're strictly an educational company. Now, my background goes back to 40 years, 4 decades. I started trading on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years, I was a specialist. That's where we get the name Specialist Trading. A specialist was just someone that made markets in roughly about 50 or 60 stocks. So if you wanted to purchase or sell a particular equity, the floor broker had to go up to the trader who specialized, or in other words, who made the market in that. So I did that for roughly 9 years. I traded through the crash of 1987 and the bull market that followed. I traded just about every market environment you can think of, straight up, straight down, sideways markets. As well, I've traded just about every strategy and system you can think of. So I know what works over my 4 decades of experience of trading, and I know what doesn't work in terms of consistency. So all we teach and mentor our students in over 110 countries around the world and in virtually every state in the United States are the things that I've accumulated along the way in my career and the things that I found that have worked in terms of consistency. These are things and techniques that I use in my own current trading, and we teach all of our students and members around the world. Now, I'm going to share with you a couple of methods today that we actually teach our students in one of our courses, and I'm going to give you those techniques today so you can start applying them and seeing how valuable they are. But before we begin, we're required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results today using these two methods, but please remember that we can in no way guarantee that any of the results I am about to share with you will be repeated in the future. Once again, we are required to show you this by law, so as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. If you haven't done so already, you may want to copy down our handle right there, abbreviation for Specialist Trading. I post different things on a daily basis, anywhere from little bits of wisdom along the way to actual signals some of our strategies have generated. So there's lots of great free information, and I invite you to follow us on Twitter. Okay, so as I stated, we're here to simply educate you. For some reason, most people, myself included, have been trained to mimic or follow what someone else is doing. Now, I didn't say not to learn from what someone else is doing. This is great. This is a great way to get on board. But once you finally understand what you should be doing, understand what fits your personality, then you should be on your own and making your own decisions. Too many traders take themselves out of the game by going to a signal service, a chat room, a trading room, or taking all their They're guideline and signals from news events or what someone is saying on TV. And these, once again, are recipes for a disaster because you're basically saying, I don't know what to do, tell me what to do. So our goal, as you see here, is not to force feed you signals. It's not a signal service. It's not to tell you what the perfect market is. It's to teach you how to trade. Now, when I first started trading, I really suffered miserably. I mean, probably the same way many of you have suffered, or possibly how some of you are going through right now. So I couldn't make a dime, even though I was on the floor and I had access to all this information. I was doing all the things I had been taught, using all traditional wisdom for trading, you know, picking tops and bottoms, support and resistance, Fibonacci, volume, all the things you're supposed to be using, and nothing was working. I was lucky enough to come in contact with two other specialists who turned out to ultimately be my mentors. And they basically taught me the same things that I teach to all of my students around the world. And that's to simplify your trading and to let go of all the things that are inconsistent. So this is our goal, not to tell you how to trade, but to teach you how to trade so you can be in charge of your own decision-making process. This is the specialist edge that was able to turn my trading around and I believe has been able to sustain me for 4 decades now. Hopefully be able to do the same with you. All right, so this is going to be a nice class here today. I have a good group, and we're going to be sharing with you some information usually reserved for the students of our courses. But before we begin, I want to just say that I love questions, and I want to take all your questions. But if we stop at each slide the way some other webinars are, we'll turn a 45-minute presentation into a 4-hour presentation. So in order not to bog down things, please hold off to any questions to the very end, okay? I promise I'll get to each and every one of you. If you have to leave early or if you're having technical difficulties, this presentation is being recorded. So you can request a copy of the link from Pro Trader Strategies, my sister site. But if you happen to have a question and you're here the entire presentation, please wait till the very end to ask questions, and that way we won't have to slow down, okay? A lot of information to give you today. All right, with that stated, let's begin. Now, I want to share 2 methods with you that really increase your odds for consistency. Let's go with the first method. I'm going to share with you a couple of rules in this method. This is strategy number 4. You've heard about me talking about this. I use this on a daily basis with my own personal trading. The beauty of this strategy is that you can apply it to any market, any time frame, and in any direction. Now, let me share with you some of the highlights. It's for all traders, so it doesn't matter if you've been trading a couple of weeks or 20 years. Beginners and advanced traders get the same basic format, and then we work out from there to meet your needs. We share with you how to trade it conservatively, how to trade it aggressively. It's up to you, all right? Now, it's designed originally for traders looking to catch quick momentum moves. When I was first introduced to this method years ago on the trading floor, we were trading in and out of trades for roughly 3 to 5 minutes at a time. But we've designed ways in which to stay into the trade a day, week, or even months if you'd like. Now, its intensity level is a 2, very moderate 2, 1 being the most intense, 3 being the most relaxed. It's right in the middle. It only uses one indicator, and I'm going to share with you what that is today. I'm going to reveal what that is. It's basically a pattern recognition strategy. So what we teach you in the course is a specific pattern. Now, it only comes with about 5 rules altogether, and they're very simple. I'm going to give you actually 2 of them today in just a few seconds. Now, as I stated earlier, it can be applied to any time frame, any direction, and any market. So it does not matter if you trade stocks and currency pairs. It does not matter if you intraday trade futures and daily bars of stocks. It doesn't matter if you're an investor or you trade weekly bars. Makes no difference. It will generate signals regardless of the time frame, the direction, and the market you're trading. That's how great this strategy is in terms of its ability to transfer over onto all markets. Now, members receive automatic buy and sell indications, but this is just for educational purposes only. Remember, we're not trying to tell you what to trade. It goes entirely against our philosophy to tell you, well, buy here, sell here. These are only given to our members as a way to check their work. In other words, we give you all the rules for strategy 4, and then we give you the add-on that generates the buy and sell arrows. But remember, that's just to check your work. Most of our students, once they understand the entire process, have no need to look at the buy and sell arrows anymore. Now, our edge here is consistency. not every trade will be a winner. So we don't want you to think that, oh, this is a system that generates 800% a year. We don't believe in that. It's all about teaching you how to trade so that you make your personal decisions. There's no way we can systematize what we teach because everyone trades differently. We teach you how to trade aggressively. We teach you how to trade conservatively. We teach you how to trade intraday. We teach you how to trade long term. How you decide is up to you. We have various options and variables on how to enter, on how to exit, and how to place your stop. So everyone does and should trade differently. We encourage this. This is how you become a consistent trader. But remember, consistency doesn't mean that every trade is going to be a winner, just the way not every basketball player is going to make every shot, no matter how great they are. The same way not every entertainer is going to have a hit record or a hit movie. It doesn't work that way. What works is a two-step forward, one-step back approach, so that when you do have these minor losses, you're able to recoup them rather quickly. This is what we promote in all of our strategies, and strategy number 4 has a very high level of consistency. Okay, so let's share with you a couple of the rules. I've talked about this before. It seems extremely simple, but you're going to see how powerful this is in the examples I share with you. And plus, when you do your own research, once this is concluded, I invite you to go and look at your own charts, your own trading signals, and see how powerful these rules are. Now, I can't give you all the rules. It wouldn't be fair to the people that purchase the course, but I am giving you 2 of the very top rules in this strategy. Now, buy signals can only be entered above the 50-period simple moving average, okay? I know it seems simple, but that's extremely, extremely powerful. Now, conversely, if you're going short, sell signals can only be entered below the 50-period moving average, all right? Now, regardless of how simple this is, go back and look at your last 10, 20 trades. I can almost guarantee that your losses were because you were selling above the 50-period moving average and you were buying below. All right, so go back and do the due diligence. Go back and look at your trades and see how this would have been in sync with your trading. So as we look here, we're going to be sharing with you examples on our new PTS Primo charts. I'm really happy and excited about this because I developed this with Pro Trader Strategies. And this is our new educational platform that has all of our strategies, all of our techniques, and it's just a really, really great trading platform. As you can see, this green tab here has all of our strategies and all of our techniques. We're going to be mainly talking about strategy number 4. Now, the first thing you want to find out is that if you are above or below the 50-period simple moving average. So what you would do is simply click on our buy-sell line tab, because that's what we call the buy-sell line, the 50-period moving average. And we have different ways to display it, all right? So once you click that on, you have about 3 or 4 ways to display that so you don't clutter up your trading screen. And here's one of the simplest and easiest ways, is which to use the lower color band ribbon, as we can see here. If you have a reddish orange color band on the bottom, that's telling you that the overall trend is down, because that means price is below the 50 period. But if you have a bluish color band, that's telling you price is above. So it's giving you the okay to look for buy setups. It doesn't say to buy simply at the market, but it's telling you it's okay to look only for buy setups, because now you're in sync with the overall trend, okay? And as you can see, it continued to go higher because it's above the 50-period moving average, as represented by the blue color band. Now here, someone looking at this would say, well, Steve, you know what? We're kind of forming a double bottom here. I think this is high-level consolidation. We're going to bust up to the outside, to the upside, okay? That's once again looking at outside sources to make your decisions. What do we look at? Well, the first thing we look at is where price is in relation to the 50-period moving average. So once again, the first thing you do is simply click on the buy-sell line, click on the option you'd like to see. In this case, it's the lower color band ribbon. So what's it telling you? It's telling you the overall trend is down, okay? Red sky at morning, trader take warning, okay? That's what we use here to teach our students, okay? Blue sky at night, trader's delight. But red sky or a reddish orange color band tells you that the trader should take warning because the overall trend is down. And as you can see here, look what happened. So you see how simple it is to trade once you're in sync with the overall trend. All right, now let's go to rule number 2. Now that we know the overall trend, we want to look for a bar that closes either in the top or bottom 25% of its range. Okay, now a lot of people always have confusion about this. They don't understand what I mean. So let's just show you an example. Here's your standard open, high, low, close bar. It does not matter if this were a tick chart. It also does not matter if this were a monthly bar. It makes no difference. But what you want to do is simply divide by 4 separate equal components. And if you can see here, we close at the very top. If you close at the top 25%, anywhere within this range, that is the market. Remember, we're only listening to the market. We're not listening to outside conventional sources, because the market is the thing you're trading in. Don't you trust that more than some guy in a chat room? So the market is giving you a clue as to which direction it wants to go. So if you are in an overall uptrend, if you're above the 50-period moving average and you see a bar that closes in the top 25%, that is a clue coming from the source, coming from the chart in front of you, telling you that that's an indication to buy. I mean, I can't think of a better clue than the thing you're trading telling you what it wants to do. Now, conversely, if we see another bar, remember, it makes no difference if this were a 5-minute bar or a yearly bar. It makes absolutely no difference. And then what you want to do is divide it by 4 separate equal parts. And if you close in that bottom quarter, that is a clue coming from what you're trading, telling you that it wants to go lower. That's an indication to sell. Now, these are 2 of the rules that make up strategy number 4. I know they seem simple, but let me show you once again how powerful this is. Let me show you some examples when we combine these 2 together. Once again, I'm sorry, I cannot give you the complete other rules to strategy number 4. That wouldn't be proper. It wouldn't be, you wouldn't like it if you purchased the strategy. Then I'm giving it away for free on the free weekly webinar. But I'm giving you 2 of the rules, and you can see how powerful they are. Once we've concluded, you can go back and do your own research. All right, so first thing, which direction are we going to be trading? Are we going to be selling or buying? Well, the buy-sell line tells us we should only be buying by the blue color band ribbon, all right? And what do we have here? We have a bar that closes in its top 25%. Now, all of the other rules were met that are required in strategy number 4, so the strategy generated a buy signal, okay? See how simple it is? And Apple went up another 8 points after that. See, this is how simple it is to trade when you listen to the market and you're in sync with what the market wants to do. Or if you missed that signal, you could have taken advantage of the second one that was generated right here. And an even third one was generated later on. How about GIS? Remember, you were thinking about maybe buying this. It was making some type of consolidation. Well, we know we're not going to buy now because we have a reddish-orange color band ribbon telling us that the overall trend is down. And we have a bar here that closed in the bottom 25%. So the software generated a sell signal. Remember, in the course, we teach you different ways and places to place your stop, different ways to enter, and also different ways in which to exit. But had you taken this trade, well, you could have had an advantage of 4 points to the downside within the next month. All right, let's look at Facebook, okay? Now, coming into January of this year, we were in the overall downtrend, as you can see here by the red color band ribbon, but then we changed over in the first week of January. So we knew well back here that we were going higher. The market was telling us, nothing else. And it's based off of simply where price is in relation to the 50-period moving average. That's how simple it is. So the market told us well in advance that it was going higher, as you can see with the blue color band ribbon. And we have a couple of bars here that close in the top 25%. They also met all of the other requirements in strategy number 4. So the strategy generated buy signals. And once again, this is all automatically done on the current PTS Primo charts. All you would have to do is click on strategy number 4 and the arrows would automatically appear. So that's the beauty of this new educational platform, because it's all done for you. It's so simple. And look what happened to Facebook. Went up 25 points coming in to May. And more signals generated. Remember, the beauty of strategy 4 is that it generates a lot of signals. So if you happen to miss 1 or 2, there's still many more that can be generated. Now here's Amazon. Remember we had the news that came out right here that it was at 1,000, right off the bat, so it's like, boy, most people say, how could I miss that? I wish I could have taken advantage purchasing calls or whatever. Well, you could have still taken these buy signals, but you just wanted to make sure that you were in sync with the overall trend. And we've known as far back as February that the overall trend was up. So you never should have been shorting or looking for a top. And this is coming into this past week. So the overall trend obviously is still up. There's no reason you at all in the world you should be selling Amazon. Okay, so we find it funny when they say not one brokerage house recommended a sell. Well, sure. I mean, we didn't recommend a sell going back 3 or 4 months earlier because we're above the 50. You never want to sell if the color band is blue. Now, remember, we're all about consistency. What does consistency mean? Consistency means 2 steps forward, 1 step back. 1 step back means that from time to time you will have small losses. For example, let's look at GWW. Now we're kind of going sideways. We have a blue color band, so it's telling us it's okay to buy. And we have a couple of buy signals generated right here. Now nothing has happened yet. They both closed in the top 25% of their range. Nothing has happened, so we're just kind of waiting. And then look what happens, okay? Now, obviously, you wouldn't have lost this much. We give you different options in which to place your stop. You could have taken a large risk or a small risk. It's up to you. But the point is, the trade would have lost money because it didn't work out as well. Now, how about this? We're looking at Starbucks right now. Originally, we were in the buy mode, but then we switched over into sell because we changed colors on the color band ribbon. All right, so we have a little bounce here, and the entire bounce, we are in the red zone. So it's okay to sell this bounce. In fact, we closed on the bottom 25% right here. It met all of the other rules of the strategy. So a sell signal was generated. So let's say you would have sold, and look what happened. So once again, from time to time, you will have some small losses depending on where you want to place your stop. But it's still, we have to ask ourselves, how can we increase our odds for success? Because there are ways to increase your odds more and to add a filter to stay out of some of these losses. Even though we realize that losses are inevitable, there are ways to increase our odds for success. And here's where we bring in method number 2 of the 2 methods I said I was going to be sharing with you today. Method number 2 is something you've heard about me speak before. Another technique I learned some 4 decades ago on the floor that I continue to use on a daily basis in my own personal. In fact, I use it today with a winning trade that I was trading the E-mini futures today. And that is the PET D, okay? So what exactly is the PET D? I know a lot of you are new to the presentation, so what is it? Well, it's a proprietary algorithm. Now, I was first introduced to this some 40 years ago. It was something we had to calculate by hand. But now we've made it proprietary. We've taken all the work out of it for you, and we've turned it into a color bar tool. So that all you have to do is look for the specific color of the bar. We automatically colorize the bars to tell you what the trend is. So it's a short-term trend identifier. If you see a series of a certain color, it's telling you the trend of the market. Let me show you what I mean here. If you have a series of green bars, well, then the short-term trend is up. Now remember, we looked at the color band ribbon before, the 50-period moving average. That's the overall trend. But there is a short-term trend within the overall trend. Well, now you know what that is by applying the PET D. And conversely, if you see a series of red bars, the short-term trend is down. So let's see how we can apply this. Here's a chart of that. Now, as we can see, the trend has been up. And then look what happened. Most traders will look for this uptrend. They'll decide to get in. And once they get in, they're caught right at the very top. How could the PET D have helped us? Well, all you would have to do is come up to our signal tab line here, click on PET D, and it automatically changes the colors. That's how simple it is, once again, using the new PTS Primo charts. So we would know in advance, in fact, we would have known as early as here, since the bars were green, that we were going higher. And even though it's not designed to get you in at the bottom and get you out at the top, we would have known well in advance by the bars turning red to get out because it was going lower. Now remember, the PET D is not a strategy. It's not a system. It doesn't generate buy and sell signals. All it does is tell you the short-term trend and direction that the market is currently going in. It's a translator. It translates what the market wants to do. As we look here at a weekly chart of the spiders, this is going back to November of last year, okay? Now, we've been in a tremendous rally a lot of people, once again, have been left holding the bag thinking like, I had no idea we were going to be going up this strongly. You know, I'm an investor and I like to invest, but I had no idea. I thought, you know, with economic news, what's going on in the world, with earnings, that we were going to, you know, probably go into some type of sell-off. Well, if we look at a weekly chart of the spiders, which is the ETF for the S&P 500, all you would have had to done is simply click on the PET-D on our PTS Primo platform. As you can see, we knew well in advance, well before this current leg of the uptrend in the markets, that all the bars were green, well back here, okay, as you can see. Same thing will happen on a 5-minute chart. All right, here the spiders going in a 5-minute. If you like to intraday trade, you simply click on the PET-D, and as you can see, once you've clicked it on, the colors automatically change. So that's how simple it is. But the PET-D, let me just reiterate, is not a system. It's not a trading strategy. It does not generate buy and sell signals. It's a short-term trend identifier. What it does is translates on a tick-to-tick basis what the market wants to do. If the market decides it wants to go up, it just translates that for you. So you can understand and say, okay, well, what am I going to do now? You still have to put some structure to it. So let's see how this can be applied to news, because I know a lot of you are saying, well, yeah, this is all well and good, Steve, but if some news comes out, you know, that all goes out the window, right? Well, sure. I mean, once again, we're all about consistency. We're not going to sit here and tell you that everything works 100% of the time. But many times, even in advance of news or things coming out, the market will try to announce what it wants to do because the smart money is already in there in that direction. For example, MarketWatch reported at the end of April that NASDAQ hits the 6,000 mark for the first time ever. Okay, the composite index early Tuesday trading hit a milestone, 6,000. So this is fantastic. We've never been this high before in that index, and people mostly will use this as a way to enter. They think this is bullish. We've never been this high before. I've got to get in. Okay, this is when the news came out on April 25th. How could we have known in advance we were going to go higher? Well, we don't know how high it's going to go, and the PET-D doesn't do that. But it can tell you at the moment what it wants to do. Now, going back all the way to December 2016, the PET-D signaled an uptrend a full 6 months before the market made all-time highs. You see how well before it took off, it was telling you, I want to go higher. It was basically announcing, almost screaming that it's going to go higher because you have, 3 consecutive green bars, which is enough to tell you that it most likely wants to continue to go higher. Okay, so we showed you what it is, but one of the best uses of which we found through our students and actually through experimenting is that it's a signal confirmation tool. So what it can do is once you get a signal of any strategy, you can use it to confirm. So let's say your strategy is based off of the news, and at the end of the day you say, boy, that's really great news, that's great earnings, that's great whatever came out. I'm going to buy tomorrow, or I'm going to sell tomorrow if it's terrible news, okay? The PET-D must confirm that. If it's a positive, if it's a buy signal, the PET-D must color that bar green. That way you know you're being confirmed that it's okay to buy. And if it's a sell signal, the PET-D must confirm it by coloring that bar red. So what happens when we combine this, the PET-D and the strategy 4? This is the strategy I talked about earlier. Well, we create probably one of our most consistent methods today, and we call it our dynamic duo because it's that really powerful in generating consistent signals. Once again, very consistent. We're not saying it's going to be 100% all the time. I'll show you some examples, but it will increase your odds for success because now we've added the PET-D. So here's what we're going to do. Here's the way the dynamic duo works. We're only going to trade strategy number 4. Remember, strategy 4 is completely different. It's based off of a pattern that you see in the charts, and it will generate a buy or sell signal. But once it's generated a signal, in this case a buy signal, the PET-D must color that bar green. That's the dynamic duo. And we're only going to take those trades because we've now added increased amounts of consistency. Now, conversely, the PET-D will generate sell signals, right? Based off of a specific pattern. Has nothing to do with the PET-D. So based off the structure of strategy before, once it generates a sell signal, we're only going to take that trade if the pet D colors it red. See, there's two entirely different methods, but they have synergy when you combine them to increase your odds for success. Whoops, went ahead. So let me show you some dynamic duo examples right here and show you how powerful this is, okay? Once again, looking at Facebook, we had two signals that were generated to go long. We're above the overall trend is telling us it's okay. And we have two signals. Now, what if you're still not sure and you think, well, you know what, I'm a little bit gun shy. I'm not sure about this strategy yet. I've been paper trading it, and this is my first real trade. Well, you apply the pet D. And the pet D has been coloring the bars, all the bars green. So you've got the confirmation from the pet D now to go ahead and take these trades, and that's where we had these really nice moves to the upside. In fact, this last signal was also confirmed. Even though the bar before it was red, that's okay. This is the bar that the signal was generated on. How about FOSL, fossil? Okay, now obviously we're in a downtrend. The overall trend has been down for roughly a good month or two. Two sell signals were generated. And this is where people get scared. They think, well, I can't purchase the puts or I can't sell this because we've already come down too far. I mean, how do I know it's going to go down lower? Well, a great way to add that confidence to your trading is to apply the pet D. You simply click on the pet D tab here in our strategy list, and you'll see what the color of the bars are. Now, had these bars been colored green the way some of them are, then we would have suggested not to take the trade because that's not in sync with the dynamic duo. But both of them were colored red, so you would have that added confidence to take the trade, and it went down another 9 points. In fact, it had a nice large gap down. Okay, Apple, here's the daily chart we looked at earlier. We are above the 50-period moving average as represented by the buy-sell line, the blue color band. We have a buy signal generated. But let's say you're a little weary, you're a little scared, you think Apple's gone up too high, you think maybe it's time to get out. Well, all you have to do is click on the pet D with our PTS Primo charts. And we've seen that every bar is virtually been colored green. So you now have added confidence to take that trade, and that's where you went up 9 points. Had you missed that, well, you had two more examples to go long here. Should say 8 points, I'm sorry. Now, LB, obviously we're in another downtrend here. The overall trend is down. The overall trend was signaling a down market well back here, well before we went much lower. But we've got a couple of sell signals. Once again, how do you know you want to take these? Well, you add the pet D, and both of them were colored red. And you can see it went down another 20 points since the first one. Now let's look at those two trades that actually didn't work out well. How could the pet D have helped us? Well, remember we had buy signals right here. This is the strategy number 4 structure. These are generated by strategy number 4. Had we been a part of the dynamic duo course, all you would have had to do was to add the pet D to see if they were confirmed. Remember, buy signals need to be colored green. So we click on fast pet D, and what do we see here? They're both red. So this would have been telling you not to take the trade. Why? Because even though the structure and all the requirements had been met of the strategy, the pet D was saying, well, the market still wants to go lower. So you may, on the short term, not want to take these signals. And it would have saved you about a good amount of money. Now, how about this example in Starbucks? Remember, we had a sell order, met all the rules, all the structure requirements had been met in the strategy, but it went up higher. It would have resulted in a loss. Now, not to say that we're guaranteeing you that the pet D will take care of all your losses, but it can minimize them by confirming if you should take the trade or not. So, sell signals need to be colored red. Let's add the pet D, and we see here that the sell signal was colored green. So this was telling you, I shouldn't take this. It's really not confirmed, and I don't have that high level of consistency that I would normally have. So you would not have taken the trade, and it would have saved you a nice losing amount of money. Now, it just doesn't work in stocks. We can apply this to other markets. I know a lot of traders like to trade options. They like to trade ETFs. Well, it doesn't matter how you enter. In fact, we look here at a chart example of the QQQs. That's the ETF for the NASDAQ index. We see here, going back to the end of last year, we had a number of signals generated, okay, a total of 5, 1 sell and 4 buys, all right? The sell was indicated when we were in the overall downtrend, and then once the overall uptrend began, well, we had nothing but buy signals generated, okay? You see, it's funny, most traders do the opposite. They'll buy roughly here, thinking it's gone too low, and when it goes lower, they get out, and then it starts to go higher, and then they say, well, it's gone too high, now I'll sell, okay? Does that sound familiar to you? I know it does to me, because that's the way I used to trade when I first started. That's the way I had been taught. You know, you buy low, sell high. But what we teach is to buy high, sell higher. In other words, you never want to fight the overall trend, and you always want to confirm with the short-term trend. So let's see how these signals would have been confirmed if we added the PET-D. Well, the sell signal was colored red, so even though it didn't go down a lot, you still had a good 2 or 3 points you could have made profit and moved your stop to unchanged. And every one of these buy signals was colored green. So that was the PET-D confirming each and every one. Now, how about a 10-minute chart of the E-mini? Because we know we have a lot of intraday traders here that like to trade an entirely different market, the futures. Well, these were all buy signals generated using strategy number 4. But you can use the same dynamic duo structure by simply adding the PET-D, and you can confirm if you want to take the trade. Now, these two were confirmed. You had a nice run up. This was confirmed. Now, depending on where you place your stop, you still would have been in the trade. This trade was not confirmed. Even though it still went up, that's okay. You still would have been in this one, and here was another buy signal confirmed. So that's what we're trying to tell you. Not everything is always 100% correct every once in a while. Now, this buy signal, even though it was a good buy signal right here, was not confirmed by the PET-D, so you probably would not have taken that. But that's okay. You would have made a lot on the first 3, I should say, and possibly on the last one. This is what consistency looks like. Or how about a weekly chart of the euro-yen? All right, we're looking at an entirely different market, different time frame. This is a weekly chart of a currency pair. Now, obviously, we've been going down. You can see how the color band ribbon on the bottom changed to overall downtrend in September of 2015. So we knew well in advance that we were going lower with the overall trend. How could we have used the PET-D to confirm? Well, remember, if we're going short, if we're selling, we need the strategy number 4 sell signal to be colored red. So all you have to do is click on the PET-D tab, and each and every one of these sell signals was confirmed. That's 2,000 pips to the downside. Had you taken that first signal, it's like $20,000 in a couple of years per contract. Not to say that you would have stayed in that long, but that's your choice. Remember, we don't tell you how to trade, where it's so different than other websites. We give you all the different variables. Now, I teach different variables in which you would have been in this trade in May 2000, but I also teach how you could have been in and out with a couple of 100 pip gain. How you decide is up to you, and that's the way it should be. You should never let anyone decide how you're going to trade. You should never let anyone tell you what to buy or what to sell. You should learn from traders, learn the structure, learn the methods, but then you should make your own trading decisions. This, in my opinion, is the only way one can become a consistent trader. So let's recap. What did we share with you today? The PET-D and strategy number 4, which make up our dynamic duo, our most popular as well as powerful courses we have at Specialist Trading and Pro Trader Strategies. Why? Because they both have consistency within themselves, but when you add them together, they create that very powerful synergy that increases your odds for success, okay? So ask yourself as we close here, do you think these edges could have helped your trading this past year? You know, we're coming towards the halfway point of the year. Are you anywhere near where you thought you'd be in January? And most traders make themselves promises of where they want to be by the end of the year. Are you anywhere close to that? Okay. Well, here's a great offer, a great chance to get on board with your trading. We're offering the PET-D, all right? Strategy number 4 along with the PET-D tool and indicator. This comes with the complete course access, detailed instruction. I'm going to give you all the different options, different variables for entries, for exits, and stops. This also comes with 4 PET-D trading techniques on how to apply the PET-D. We just showed you one, which is using it as a confirmation tool, but there's other ways to use it as well. Once again, it includes both add-ons, and you get lifetime correspondence with someone who actually uses these on a daily basis. All right, we're not just throwing you to the wolves and saying, good luck with this. Let us know how it works out. I'll be your personal mentor. You can contact me anytime you like through corresponding through email. Now, this is our dynamic duo special, but we're not stopping there. We're also including email alerts for a limited time only. This is to, once again, be used and applied as an educational tool only to check your work. So when a signal is generated, we will email you alert that night the signal was generated so that you can look to see if you saw the signal yourself, if you generated the signal as well, because we want to teach you the rules. We just don't want to force feed you signals. Ultimately, we want to have you come to the point where you just look at a chart and you know where a signal has been generated. The best way to do that is by checking your work. And so we email you alerts on some of the high probability setups. For example, here's one that was generated on the night of the 17th. For entry on the 18th. This was an MA. It was a strategy number 4 buy setup. Okay. Now, if we look at the chart here, the way most people trade, they would say, "See, why would I want to buy this? I mean, the stock is basically going nowhere. It's in a range, and I've been taught always stay out of ranges. That's where you get whipsawed." And the chat room I go to, they don't even like this stock. They follow the institutions, and the institutions are selling this, and at the same time, it's at a very high Fibonacci resistance level. So I have no interest in buying this. Right. Do you see all the way I made the decisions and the justifications for not buying this based on outside sources? This is the way 99.9% of all traders trade, based on what the institutions are doing, based on traditional wisdom, the way you've been taught to trade. I know because I'm not trying to be arrogant or condescending. This is the way I used to trade myself, and it didn't work. My mentors taught me the way to become a consistent trader is to listen to the market. So what was the market telling us? Well, the market was telling us actually it wanted to go higher. Why? Well, the overall trend is up. You see here on our PTS Primo Charting Platform, the blue color band ribbon is telling us that the overall trend is up. So even though we're going sideways, the overall trend is still up. The market is telling you overall, most likely we're going higher. So what do we have here as well? We have a bar that closed in the top 25% of its range. So this was a signal that was generated that we issued an alert to. So let's say you like to purchase options. You like to buy calls, but you're thinking, boy, I'm not sure I would buy a call on this because I don't feel confident yet, and I'm not sure about what I think about the markets. Well, the way to add that confidence is to see what the market is trying to tell you. It's already telling you the overall trend is up. The structure is telling you that's a buy setup. Now let's see what the short-term trend is telling us through the PET-D. All you have to do is click on the PET-D once again in our strategy tab here. And, well, guess what? Even though the first 2 bars prior to the signal were red, all we are interested in is what the setup bar is. And it was colored green by the PET-D. So the PET-D is telling you it's okay to take this trade. You have a very high level of consistency. And so look what happened in the next week. The stock gained 7 points. Okay? So whether you bought the stock or whether you bought options calls or some type of long call strategy, this was confirmed. This was an actual signal that took place. So you see, everything we base this decision off of is coming from the source. It's coming from the chart in front of us. We don't care about volume. We don't care about news. We don't care about those things. If they work so well, if traditional wisdom works so well, what most people trade off of, then why aren't 85% of all traders successful? It's the opposite. 85% of all traders fail. It's because there's no consistency in those methods. There is consistency, though, in listening to the market, because the market pretty much knows what it wants to do. Then all we have to do is just jump on board. So we're offering you a great special for all the attendees today to turn your trading around, to get back on board in 2017. It's not too late to get your trading back on board. Now, if you purchase these 2 methods separately, strategy number 4 and the PET-D, it would run you close to $5,000, okay? We're dropping that price down to $3,700 roughly, but we're not stopping there. We're also dropping it down an extra added percentage down to $29.95. That's for lifetime access, one-time fee. But we know that a lot of people don't have the resources to come up with that one-time fee, so we're also providing another discount. We're not stopping there. We're going to throw in strategy 4 and PET-D for a one-time payment of $497 with just $97 per month. But we're also including the platform I shared with you today. That's the PTS Primo Charting Platform, where it makes things so simple. All you have to do is click on one of those tabs and strategy number 4, buy signal alerts come on, where the PET-D automatically comes on. It's that simple. Okay, this includes real live time, or I should say live real-time data for stocks and for currency pairs, for forex currency pairs. So this is all thrown in for just a one-time fee of $4.97 and then just simply $97 per month. We're also including the PTS Primo Charting Platform. So I can't think of a better deal for such a small price. I mean, you know, that's tremendous. If once again, if you purchase these things, one-time fee separately, it'd be close to $5,000. So here's how to take advantage of this great offer. Once again, my sister site is Pro Trader Strategies. All you have to do is contact them. You can email them, and that's how you would get this great $4.97 plus a small a monthly fee of $97 per month, because that will automatically set up and put together that payment plan for you. The best thing to do would probably be to call them, because that way you can set that up and they can have you up and running ASAP. Okay, call them at 310-598-6677. Now, if you want to take advantage of that one-time lifetime access fee, here's the link below. As you can see now, if you it's not live, you'd have to copy and paste that onto your browser, but there is a live link in the chat box on the Go to Our Webinar column on the far right. So I'm going to leave this information up. Remember, this is how to take your trading to the next level, and included with whatever method you decide for payment, I'm going to be your personal mentor for life. Okay, you're now a student of mine. You can access me through email whenever you'd like. So I'm going to open up the question and answer portion now, and thanks for holding off. And I'll leave this up here, but I'm going to answer your questions now. John says, how are you seeing the top 25%? Well, remember, John, we showed you a couple of examples, but look at it this way. It does not matter what type of bar you look at. So in other words, if you're looking at a candlestick or if you're looking at a standard open, high, low, close bar, the range is the extreme high or the top of the wick to the extreme low, the bottom of the wick. Okay? So all you want to do, now this is something over time, it will take you a fraction of a second to see. But in the beginning, if you're having trouble with this, all you have to do is simply divide that range from top to bottom by 4 separate but equal parts. Now, if you close in the top quarter, since you've divided by 4 separate equal parts, that's closing in the top 25%. Now, combined with being above the 50-period moving average with the blue color band ribbon, you have added a great clue to your trading, because that's the market telling you it wants to go higher. Now, these are two of the components of strategy number 4. That's not a complete strategy in and of itself, but these are two of the rules that make up that strategy, okay? Now, conversely, let's say the color band ribbon is red, reddish orange, okay? You're below the 50-period moving average, and you see a bar that closes in the bottom quarter, all right? You divide that bar by 4 separate but equal parts, and it closes in the very bottom 25%. That's the market, not some guy in a trading room or not some guy on TV. That's the market telling you it wants to go lower. Okay? Remember, we take all our cues from the market, from the chart in front of us, not from outside sources. There's no consistency in learning and trying to trade by mocking someone and an outside source. That's why we don't believe in chat rooms, because they turn, basically, most of our students, they turn into crutches for most of our students. And they think, well, I'll just take their signals. We don't want you to do that. As I stated earlier, this is a recipe for disaster. Let's see, what did you say about the Amazon bullish ride? Well, Mika, the first thing I said was a lot of people, will look at that when they see the news announcements, or they go on, online or see on TV that night. It's announced that Amazon hit 1,000 in its price level for the first time ever. And most people will think, boy, that's amazing. I wish I would have been involved. Now, I wish I could have taken advantage of that. I wish I would have been able to buy some calls and that. Well, we're showing you how you could have 200 points lower, all right? And if you wanted to look at weekly charts or intraday charts, you could have taken advantage of that. And 2 of the rules I shared with you today were in the presentation, okay? Another question, if the dynamic duo does not generate 100% accurate signals, is there any other strategy such as 8 or 3 which can be combined with the dynamic duo? Well, first of all, the PET D and strategy 4 make up the dynamic duo, okay? Now, no method is going to generate 100% signals. I mean, I've been trading for 40 years. I have not found anything that generates 100% of the time. So if you're looking for that, it doesn't exist. And that's why most traders are just chasing these things. But the beauty of the dynamic duo is that, in my experience, it works better with anything I've ever seen. Now, can you apply it with another strategy? Sure. You can apply it with any other strategy you like. It doesn't matter. Number 8, number 3, number 5, these are all other strategies I have. And it will increase your odds for success. You will increase your odds for consistency. Now, in my opinion, what are the best levels of consistency? When you have 4 and 8. That's all. That's all we're trying to say. Okay. Remember, these are two separate ways in which to trade. All right. The structure telling you that there is a nice setup is strategy number 4. It's based off of a pattern. It's based off of the actual bars. It's based off of what the market's doing. And it's not difficult. We teach you this in the course so that you know what to look for. It's not a system where you just have to simply follow the same way each and every time. We teach you different ways in which you can decide to enter, different ways in which you'd like to exit. So it's up to you how you want to trade it. But this pattern has a high level of consistency. But sometimes, like everything else, it will go into a drawdown phase. So how can we increase our odds? We add the PET D. The PET D will not only verify and confirm what the best setups are, it will also keep you out of those bad ones the way I showed you as well. But once again, we're not guaranteeing you that every trade is a winner. Life and trading are not like that. So if you're trying to chase that, it doesn't exist, okay? Now remember, here's the information in front of you if you want to take advantage of that. We're already halfway through the year, okay? I know a lot of you are still struggling. You're trying to make ends meet with your trading. You thought by now you'd have so much money going for you in the bank, you'd take that extra vacation for the summer, or you'd buy that new car, or maybe that addition you want to put in, that remodeling on your house or home, and you're nowhere near that. I'm not promising you that. I'm not guaranteeing you that. But what I am promising you are things that have shown to work for me and work for a number of our students around the world. Remember, we have students in over 110 countries and in every state in the United States. You can go to my website, go to Pro Trader Strategies website, and see their testimonials and how well the dynamic duo has changed their trading from being inconsistent to now being consistent for the very first time. So if you want to change your trading around, and you want to get taught by someone who actually uses this on a daily basis, here's a great way to take advantage of that. You can pay that one-time lifetime fee of $29.95, or take advantage of that really inexpensive one-time fee of $4.97 and only $97 per month. That comes with my new PTS Primo Charts trading platform. So it's a great way to get introduced to that, and it makes things so simple. It's all right there for you, okay? So once again, contact Pro Trader Strategies. I would suggest calling them to put together that payment plan and to be up and running, and you'll be a student of mine starting today. Okay. So as we conclude here, I just want to say thank you so much for attending today. I hope you got something out of this. Go back and look at those two techniques I share with you, which is the 50-period moving average and where a bar closes and it's either its top or bottom 25%. I'm sure you'll see how powerful they are and how you wish you would have been able to apply them to your trading, especially through some of your losses you've had. And I think it'll convince you of the tools that we teach you that are so simple that can really elevate your trading, okay? We're all about educating you so that you can be a consistent trader. As we close here, I just want to say thank you so much for attending today. I hope you got something out of us, and I really look forward to all of you becoming students of mine and members of the Dynamic Duo course. Call up Pro Trader Strategies and get that great payment plan set up. Thank you so much. We'll see you next time. Bye-bye.